Hey guys, thanks for joining this webinar on Biowise, our hedge fund for biotechnology. And our plan here is to strategically invest in life sciences and technology companies that are disruptive and change the future by bringing innovation to the masses. And why are we talking about this? Well, because out of all venture capital investments, the one that's returned the most amount of capital compared to others has been in the technology space, specifically biotech. VC companies that are just randomly putting money into biotechnology startups are averaging annual returns of 27%. And what's even better, they actually get a good social return out of it because they're actually feeling good about investing in companies that are actually making the world better and improving people's health. So imagine if they're just using that type of a strategy, what if you could fine tune the process? And here's the problem with investing alone versus actually going through a fund or a VC company. So for a single investor, it gets really complex and it's hard to find enough deal flow. So what happens is you just get kind of stuck on one deal instead of seeing maybe hundreds of deals and cherry picking the best ones. Plus, in order to do that, even if you had the deal flow, there's so much underwriting and due diligence and negotiating, background checks. It just takes a long time without having a team. And unfortunately, some people will put a lot of their money in just one, maybe two of these type of investments, and they don't get the diversification and the safety that comes with that. And as you all know, that's probably not the best way to invest. So there's an opportunity in healthcare today, and this is what we're going to talk about and how you could take advantage of this. We have room for about maybe 15 or 16 investors left in our fund. And so some healthcare investors will search for a prize deal. We call it one deal-itis. They're very focused on just this one deal that they see. And that's the risk, but the opportunity is huge since healthcare and biotech has some of the highest returns. Margins are really high, especially in the United States. 1/5 of the American economy is actually biotechnology, and medical devices, healthcare solutions, as many of you guys know, have created a lot of multi-million-dollar companies and opportunities. A little background about me. Not everybody on this webinar knows me personally. My name's Amir Baluch, serial entrepreneur, anesthesiologist. I have a background in private equity acquisitions, mainly in real estate and securities transactions with few securities license. And through that process, I really learned how other investors invest and what's good to do, what's not good to do. And I really got into this since my dad was a physician, and he was not good at this and never partnered up with anybody. And he would just lose money all the time until eventually, he had to declare bankruptcy. So I wanted to make sure that never happened to anybody else. So this is why I like to put together projects and have multiple people team up together. So that's what we're doing here. I've got a lot of mentors that help me put all this stuff together and help me in this process. And this is what we put together this year. A little bit more background about the team. We have Nate Dodson on the legal side. Some of you guys already know him and use him for corporate things. So he has background in economics and he deals with a lot of other fund managers, corporate structuring. He's advisors to other funds as well and private equity syndications. And more background about me if you guys want to read about it. Most of you guys hopefully have a copy of my book, Make It, Keep It. And a lot of you guys know I've already done a lot of real estate projects, over about 80 that I've participated in some form or fashion, either on the management side or the security side. So now let's go back to how we can fine tune what we're trying to do to get even higher returns with lower risk. So here's the solution. We came up with Biowise, and we have certain criteria that we use before we get into any acquisitions of any businesses. And we have one example that we're going to showcase here as to show you guys how we actually negotiate with these companies before we invest in them. So the investments are always very strategic. We had to have terms on our side. We try to get companies at significant discounts or either get options or negotiate on terms. We want to go into companies that are disruptive, that have higher multiples. We also want to look at companies where there's already a viable exit buyer. We don't want to get into a company that doesn't know who they're going to sell to, and or if they're going to go public, then we need to know that too. And creating the diversity is really what is bringing down the risk while getting higher returns than other VC companies on average. A little background about the industry. Besides some of the things that we already mentioned, the current legislative environment is proposing a lot more deregulation, and that's actually making it easier for companies to grow with even less capital. So if they need less capital to grow, they're actually going to have higher margins, higher return on investments with lower risk. Also, the new tax code is incentivizing major corporations to keep their money in the United States, and that's going to lead to a lot more M&As, mergers and acquisitions happening inside the United States, which means companies that are being developed now, there'll be a line of people out there to buy them up. Also, for tax reasons, corporate tax returns have been lowered, so they're a little bit more tax incentivized to buy out these companies. And also, because the deregulation has come down, that also means smaller and faster clinical trials. So, companies that might take 7 to 10 years to grow, maybe shave off a couple of years because they don't have to do as many clinical trials. And of course, you guys already know the demographics in the U.S. are always getting older, so that's why we put the bio and the tech, and we're going after the life sciences. Just idea of some market size over the years. In general, they're over a couple of years, 7 or 8 years, the overall market cap will double, and we can do a lot better than that by cherry picking certain investments. So here's an example of our first investment into a company called VIC, and that's what this current investment round is for. So this company VIC, what they do is they provide the seed capital for companies that are licensing technology and intellectual property from the top universities. So the universities are doing all the research and coming up with the innovations, but VIC, this company, provides the money to actually get them going and take it to market. And before they do that, they look for an exit buyer. So they kind of lay out the whole plan from beginning to end. What are we trying to do? And then they execute it, and they start off with about $250,000 into each company. And right now they have 16 of these companies. And they've been taking about 7 to 10 years to get to the point where they are now with these 16 companies. They have a lot of experience. Once they start up the companies, they bring on the top CEOs that they can get in that space. So for example, 14 of the 16 CEOs of these companies have already been in large exit events where their companies were sold for millions of dollars, hundreds of millions. And we have some videos too. If somebody wants to see some of that afterwards, we could do a separate Zoom conference for that. The current valuation of just 12 of these 16 companies, 12 of them are worth $450 million. The other 4 have not been valuated yet. We had to get third-party appraisals or get a new valuation based on the next round of funding. The good thing is our buy-in price is at a valuation of $52 million after a lot of negotiating and going back and forth for about 14 months now is actually how long this has taken to get to this point. And so not only are we coming in at just under 10 cents on the dollar to buy the portfolio companies and get that diversity and get an awesome management team, but last January, we were able to negotiate that we get the same percentage equity in all their future companies. And so every time they create another company without us putting any more money in, the hedge fund is going to get equity in that company for however many years they continue to do this. They plan on doing it for at least another 5 or 10 years. Here's some of those companies out of the 16. Actually, this is all 16 of them. So these highlighted in yellow are like the next ones that should be selling off here soon. Actually, Akeso Biomedical is actually under contract already. I can't tell you too many details right now, but the valuation they got and the purchase price is actually above the $100 million amount. And just this company's sellout out of the portfolio is enough to return all the capital to the hedge fund. So that's significantly reduces the risk right there. That's really huge. This one sale out of the 16 is already enough to bring back all the capital. So that's really awesome. And Akeso, they have an antibacterial solution that's actually not an antibiotic. So things that are resistant to antibiotics, you can actually kill it with Akeso. If you guys want any details about any of these 16 companies, just let me know. We could go through all of them if you want, or just, the top 5. Actually recorded some videos talking with the CEOs directly of these yellow ones right here. For example, Biologics MD is a new class of drugs called cell cycle activists. They can actually regenerate hair growth. You don't need platelet-rich plasma, stem cells, or anything like that. It actually triggers the hair to go into the next cycle of growth. It works even on cancer patients and patients with alopecia areata, and there's no other product like it on the market. Biowise, for any cardiologists out there listening to this, Biowise is a cloud-based software company that takes data images from 2D echoes and creates a quantitative, not qualitative, but a quantitative way to look at wall motion abnormalities. And it's the best way at predicting future heart attacks. And as their data gets better and better, they're going to be even more predictive. So they're going to have the top predictive mechanism and algorithm for predicting heart attacks in the US. Clara is pretty cool. This is a way to, for my anesthesia guys or urology guys that are involved in doing cystoscopies for kidney stones, they have a way to get rid of all the stones, not just some of them, but all the stones less than 2 millimeters with a water filtration system. And it takes about 30 seconds to a minute to do the whole procedure. So once the stones are blasted, you put in their device, which is the same cost as the current basket method, and you're done. You get 100% of those stones. SFC Fluidics, for anybody that's familiar with diabetes, that's a disposable once-a-day insulin patch that delivers insulin based on the patient's blood sugar levels. It is controlled with an app. And in the future, they're probably going to use AI to actually have this auto-regulated. You won't even need an app. You just dial it in what you want it to be and you're done. Tesseract is actually not a biotech, it's just straight technology, but it's a type of a mesh material that they can use in cars, and it significantly reduces the impact from any collisions, while at the same time being cheaper and lighter to the car. And this is actually, there are already large automobile makers using this in production cars right now and testing it out in crash tests. And there are actually, some of these companies are already getting offers right now. We're just kind of turning them down right now. And Tesseract might be the next one to sell actually toward the end of this year or early next year. So that's an example of some companies there. Just some key features, just keep in mind diversity. We have the same percentage ownership of all their future companies. And this is just a private deal. This is not a public offering for this hedge fund right now. If you're just a part of my email list or Financial Wellness MD or something like that, that's how you're getting this invitation. You'll get quarterly reports. We'll be doing monthly audits. We're expecting pretty large returns. Probably, they're saying probably just with this one investment, 10x return over 5 years. That's after they discount it 65%. So I'm actually going to discount it even more and just say, between 40 and 80% return, maybe around 60% return is what I think is pretty reasonable with this. And the other opportunities, well, this opportunity here is just to invest into the hedge fund. And the first project is the one we mentioned with Vic. And our other projects will be similarly like that too. We have 2 other projects that we're looking at right now that we might move into in 2019. One thing to notice, since our first investment no longer needs capital because Akeso, that company, is already under contract, they're going to close out this deal in October. So we're going to be closing at the same time because we don't have anything else that we want to fund right now. And if you're interested in this, just let me know. You can send me a text if you have my phone number. If not, just go to calendly.com bit.com/abaluchmd. And you could book a time to meet with me for about 15-20 minutes to talk about it. You could also email me at amir@biowisecapital.com. And that's it. So if anybody has any questions, actually some people are already typing in some questions. Let's take a look. Okay, so one person asking, how are the returns projected? So what they did is I could show you on another Zoom call. I had to pull up the data, but they got a third-party appraiser to find out what is the statistical chance of these companies selling out over what period of time. And once they got that data, then they discounted it 65% because you never know what's going to happen. And after that, that's when they came with the valuation showing that it's probably going to be a 10x return over 5 years. And then I discounted it even more after that. And that's how I got to my level of 40% annualized. Another question. Okay, so somebody doesn't explain the equity in other businesses and how many businesses. So that's a good question. We don't know how many businesses they're going to do, but they're on track for creating about 4 to 5 a year. So over the next 5 years, maybe that's another 20, or the next 10 years, maybe another 40. And the company, they're not trying to just cash out and call it a day. They actually they're on a mission to be the largest seed capital investor, almost like an incubator really, for biotechnology. And that's actually one of the things I'm going to be doing as a member of their board, which was something I negotiated in the contract too. So while I'm on their board, I'm going to help them get to that too. And also any investors here that are physicians can also be part of a mastermind. So whenever projects come in, they could share in the dialogue and figuring out what's the best strategy. Hey, does this make sense for the market and things like that? So that's another interesting aspect of this deal too, if you're a physician watching this. And explain the equity in other companies. So let's say however much money our fund invests, let's say if that gets, let's say 5% of the company or something like that. Well, we'll also get 5% equity in all those other companies without putting any money into it. So that's what it means. So whatever we're getting into equity-wise with Vic, we're going to keep that ownership for the remainder of the next 5-10 years, maybe more. More details of the company. Somebody's asking me. Yeah, so just we can talk about each one of these companies for 2 hours, actually, and there's 16 of them. So just send me a text or email me, and we could talk about that on a separate call, and I could do a Zoom call and do a screen share, and we could go over those companies with you. And let's see what else. They're asking about documentation. So the documentation for this, it's just like a regular PPM. You're going to be buying subscription units. So what you want to do is go to biowisecapital.com. Just go to that website, biowisecapital.com. And actually, this is the only way you can get documents. You have to go in there, you put in your name, your email. You have to click a box verifying your net worth and that you're a qualified investor. Once you log in there, then you could download the documents. It'll also send me alert that you created that. So I'll have a ledger for everybody that's investing. And then after we get to a certain amount of investors, then we'll just kind of close off the portal, and that's it. All right. Anybody want to type in any other questions? All right. I guess that's it. If anybody else thinks of anything else, let me know. If you have questions about investing or the portal, let me know that too. And I'll talk to you guys later.